Hey, I'm Charting Man Dan, trader, technical analyst, and mentor with the Chart Guys. In this video, we're going to check in on the markets and the major sectors. We've got a key daily pattern shaping up right now as we come to the end of the summer lull, and we're expecting the break of this pattern is going to dictate sentiment for a good bit of September. I'll show you what I'm looking at. Let's get to it.
So we can see here the S&P 500 and the NASDAQ have very similar charts. These are on the futures charts, and it is a good old-fashioned tightening daily range. The bears need to show up tomorrow and give us a lower high if we're going to continue tightening within this range. If that were to happen, it would be a nice way to end the summer just as far as constricting volume, lowered volatility, everybody get one more lazy week, and then hopefully we come back from the holiday Labor Day next week and break this range. And how we break this range is going to dictate a lot in the short term, because it's either going to be a confirmed daily uptrend, whether that happens now or we can still reject and tighten up and then break bull. But if we break bull, the weekly bounce will be underway. The next question will be, can the bears confirm the weekly downtrend? We'll talk about that bridge when we get there. So weekly bounce underway. If we confirm the daily uptrend, we're going to be closer to the highs than we will be to the lows. Or we break these ranges bearish. We're at 6 to 8 week lows in many names in the market, and there will still be a good bit of bearish sentiment. So that's going to have a significant impact here in the short term as we head into September. And we can say a number of things. Number one, good job by the bears on Thursday. Number two, nice recovery from the bulls. We've recovered the majority of that drop from Thursday. And today was another day, and we look at the NASDAQ, it's doing the same thing. The NASDAQ is a bit further from daily resistance, so there's more space to remain within this tightening range. But the NASDAQ, yet again, a gap up for selling today. This is the third time in 5 days that we've gapped up, and we dropped on the morning, and then we ended up with a 5-minute falling wedge, knowing that an hourly high or low was the most likely scenario, but ended with a tightening range. The bears have to confirm an hourly downtrend for the daily lower high to be set. And the bulls played some defense today. There's the low of the day. We defended it into the close. So bears want to see a loss of the hourly uptrend and a confirmed hourly downtrend tomorrow for those daily lower highs. Otherwise, we're going to be approaching resistance. For the S&P 500 to break this resistance, we have to see the healthcare and financial sector break some short-term resistance, which is giving the bulls some trouble. You look at XLV, and we got within pennies today of the bounce high, and we failed. So resistance, 134.30, 134.39, and we topped out at 134.31. So there's clear resistance in the healthcare sector and the financial sector as well. We failed resistance by a penny. We've got to get over that bounce high to negate a daily bear flag. If we cannot break that level, it's a daily bear flag. If we break that level, daily bear flag is likely negated, and the weekly bounce is then underway. So to have confidence in the S&P 500 breaking this pattern bullish, we've got to see these two major sectors break their recent highs. Semiconductors also tightening up in a very wide range. We have the low, the high. Again, the low was marked by a gap down. This was a gap down, big bounce. The high was marked by a gap up on Wednesday or Tuesday and Thursday. And we're scouting a daily lower high to be the most likely result, anything under 156.59. Lots of space for it to form and continue tightening up into the end of this week. NVDA today had a base of support at 450. We had relative weakness on the morning with a straight drop, and then we broke support with zero follow through. And from that point, we then shifted into relative strength. And on the afternoon, this was a significant move up, and Lori was posting in the chat room a good bit of options activity with the $500 calls being hit and that playing a part as well. But next we're going to be watching for anything under 500 to be a daily lower high. And the question will be, can the bears confirm the daily downtrend? So how does this play into the bigger picture setup? Well, we have a daily tightening range. If that's going to break bear, NVDA is likely going to confirm a daily downtrend. Right now, NVDA bigger picture is just fine. There's nothing, we broke bull with no follow through. We make note of that, but the bears still have a lot of proving to do here to ruin this longer term setup that is still favoring the bulls. And that's the case for a lot of these charts. Amazon weekly uptrend, EMA 12, still holding on just fine. Google, weekly uptrend, EMA 12, still holding on just fine. So there are some charts that definitely can see bullish continuation if we see this tightening range break bull. What do I favor? I don't know. I'm treating it 50-50. I'm not doing a lot of trading. My trading is constricting as the range and the volume constricts, and then my trading picks up when the ranges break and expand. And so I'm open to a number of things, and one thing I'm open to, we'll talk about this when we get there, but we could confirm this uptrend on these names and get no follow through. And if we did that, then that might be the weekly lower high shaping up. And then we'll see if the bears can confirm the weekly downtrend, which is going to have significant implications on the long-term charts I keep talking about. I don't want to get overcomplicated here. We're going to take it one at a time. And right now, all we care about is this daily chart and how it breaks probably by the end of this week, if not first thing next week. Again, reminder, no trading this coming Monday. We've got a lot going on this week at the Chart Guys. We've got tomorrow, I'm going to live stream publicly 9 a.m. through the open. A little bit of an open house to show you how we do things. See if any trades present themselves, but I will be picky with these daily ranges tightening. Then after that, at 5 p.m., we've got a webinar with myself, Lori, and Lamont, where we're going to talk about bag holding. And then on Thursday, Lamont's got an Ask Me Anything Q&A to get a little bit more familiar with his trading style, volume profile, and Lamont the trader. So keep an eye out for all that stuff. We'll post it on social media as well as it being here on our YouTube channel. Tesla. So Tesla has a tightening 4-hour range. And if we look at the extended hours levels, it was the opposite of NVDA today, where we started with relative strength pre-market. And in the first few minutes, we hit this extended hours resistance at 244. And then we were weaker all the rest of the day. And so what I'm watching is a double top and a double bottom. 226, 227, base of support, 444, wall of resistance, and it's up to the bulls to set a 4-hour higher low and break this double top if we're going to see this bounce follow through. So keeping an eye out for a potential addition to a swing trade that I already have, but only if I gain confidence that the NASDAQ and the S&P 500 can break their tightening ranges bullish. We went over healthcare and the financial sector and the key resistances that they have to break. IWM broke resistance, but no follow through, and that's due to the financial sector not breaking resistance. IWM is tied to the financial sector, have to see help from XLF breaking resistance if IWM is going to follow through it all. Technically, the weekly bounce is underway. There's a lot of space for a weekly lower high to be the result of this bounce, but again, we're not going to follow through unless XLF breaks resistance. ARKK, growth names, trying to set up the daily trend change. Not much different here. Higher low is set. Must break 42.30 for the higher high. Otherwise, the daily downtrend remains strong. Chinese names got a gap up with some follow through. A lot of headlines out of China over the weekend as far as, decreasing their taxes on trading, which means they need some liquidity help and other things. But it was a bullish initial reaction, and we're going to be watching for potential weekly lower highs here as well on BABA, FXI, KWeb. Their weekly bounces are all underway, but there is space for the weekly lower high. So the question for Chinese names into September, can bears set the weekly lower highs quickly and confirm weekly downtrends, or do we see 50% plus bounce retracement, which would be a win for the bulls to give themselves some space to work with? So Chinese names bounces are underway. XPEV is one of the stronger ones that I'm keeping an eye on. Weekly higher low off EMA 12. Granted, there's space for a weekly lower high here as well, but we're well off that low at this point by 20-30%. And earnings were a factor in that. On to commodities. The dollar still not consolidating. Again, just keeping it simple at this point. EMA 12, we've held it 4 times now. If EMA 12 is support, the dollar bulls are just fine. Weekly stair step is on its 7th week of bounce in a row. 104.70 is resistance that we are just underneath. The metals bulls are positioned well, but we've got to see the dollar weaken. Gold today confirmed a little daily trend change, but no follow through at the moment. Zooming out, weekly bounce, a lot of space for a weekly lower high. I'm going to be keeping an eye on a falling wedge type of pattern to potentially be shaping up. Silver is much stronger. Daily bull flag attempt. In the miners, confirmed a daily uptrend today. GDX, quick little higher low and higher high. Weekly bounce underway. So again, these things are all bouncing without the dollar topping out. Can the dollar top out and help these names follow through? That's the question for the rest of the week for me, related to the dollar and gold and silver and miners. Oil, decent daily bounce. Is it shaping up an inverse head and shoulders? If we fail to break 81.75 resistance, the bulls must then set the higher low and higher high. For the weekly consolidation to remain healthy, right off EMA 12, it's still a potential bull flag at this point, but bulls need to shape up that inverse head and shoulders for that weekly higher low. In natural gas, bear break, no follow through, straight into a big bounce, has this megaphone as worth watching. We will have to confirm a daily uptrend from here with the higher low and higher high, but clearly this downtrend support is worth watching. That's now the second bear break, really the third. Bear break, straight into a big bounce, bear break into a big bounce, bear break into a big bounce. So paying attention to the megaphone. So that's where we stand. It's all about the NASDAQ and the S&P 500 tightening daily ranges. And we'll get more clarity. Burden on bears. Bears need to set these daily lower highs ideally tomorrow. And so that's a setup I'm potentially watching for depending on how we shape up pre-market. But we'll watch it all live together for those of you tuning in at 9 a.m. Eastern. We'll do some pre-market prep and then watch the open for the first hour. And I'll see you there. Thanks for watching. Do good things.